Okay, guys, we should be live here in the group, Forex Smart Money Trading Academy group. That is my group here, and should be live in the group here right now. So what we're going to do today is we're going to go over the trade alerts from this week, from the week of 10, 17, 22. So starting on Monday. And so again, as you know, I show you in the videos how I mark up my charts and I set my alerts at my area of interest, right, on the 4-hour charts. And those are logical areas where I expect price to come back to and make a reaction. Okay. So once those alert goes off, those alerts in TradingView go off, I get the email right here. So if you watch my videos before, you know what I'm talking about. Last week, I think we had 8 alerts go off, and all 8 of them would have been winning trades. Well, actually, one of them could have been a losing trade based on whether or not you used our exit manager software to get out of half of the position once you were up a significant number of pips. This week here, we have 2, 4, 6. It looks like we had 8 again, or 7 or 8, 7 this week. So we had 1 come out Monday, 1 Tuesday. We got 3 of them on Thursday, and then 2 of them came out Friday. So let's start here at the top on Fridays with EUR JBP and JPY and CHF JPY. Normally, you'll notice what will happen is on a particular day when the alerts come out, they'll all have a pair in common. Like here on Thursday, these were 3 EUR pairs. And then, of course, on Friday, 2 JPY pairs. So let's look at the first one, EUR JPY. Again, if you remember on TradingView, we set up our alerts here on TradingView. Right? That's where the alert was set on the 4-hour chart. And you can see price came back down here on Friday and touched and went into our 4-hour area of interest. Okay. Now, when we look on our MT4 here, right? We go to the 4-hour chart. There's that candle right there. This line right here would be our stop loss area. So this is our area of interest right here. These 2 lines right here. And then we drop down to the 1-hour chart, and you can see what happens is it blows right through our area of interest. And so that invalidates the trade. Okay. Not only that, look at this price action coming down. Big impulse candles coming down into our area. We don't like to see that, guys. That's not what we're looking for when price comes back into our area of interest. We're not looking for this because this tells us that this is now on the way down. And this pullback here could just result in it dropping even lower, right? And the trend actually changing from bullish to bearish. Okay. Now, we could also then go back to the 4-hour, and this line right here would be the next banker candle down. Okay, so it does come into that area as well, and it did not blow through completely that area. Our stop loss there, if we were to mark this up, would be right here. So it hasn't blown completely through that area yet, but like I said, with this price action, that's not what we're looking for. Let me just see if I can do a quick snip here. If I just take an image of this here, for instance. So you could see this price action coming down. That's not what we're looking for. We're not looking for this impulse down. We're looking for price to do something like this. We're looking for it to flag down into our area of interest, right? Before then moving up. Okay, we're not looking for this big push down like that. We don't want that. That's not what we want. So this really kind of invalidates this trade. And I wouldn't do anything with it. We'll just reevaluate tomorrow when we go through the charts and we do our weekly trend outlook and chart markup session. We'll decide then if we want to look at this pair any more for buys, or if we think that the trend is going to change here. So right now with this big move down, that's just not what we're looking for, right? Okay, So back to here now. As you can see, let's get back into here. Let's just get rid of this. Just close that window there. Let's get back into our chart. So this trade here, we'll have to reevaluate this tomorrow when we do our weekly trend outlook, okay? The next pair was CHFJPY. Again, in Trading View, we had this 4-hour candle marked up right here. It came down into that area, right? When we look on here on the 4-hour chart, we see that candle's right here. Our stop loss area will be down here. So this would be our area of interest right in here, right? We drop down to the 1 hour, and again, we get the same price action straight down, just like we did in the last pair, okay? So that you know, again, kind of invalid. It doesn't completely invalidate the trade here because we didn't blow through our area. But because of this price action down, you know, I'm really not going to be comfortable taking a buy on this pair, right? Would you? No. So again, we have to reevaluate that tomorrow when we do our weekly trend outlook session live here in the group. Actually, tomorrow I'll go live on my timeline, so not in the group. I'll go live on my timeline tomorrow. When I do the weekly trend outlook and chart markup session, I do that live on my timeline, and then all the other lives I usually do in my group here, Forex Smart Money Trading Academy. So let's go to the next pair here. We have EUR-AUD. Okay, so if we look at our Trading View chart here, we see we had this banker candle here marked up. It came down into that area right here on this candle. Okay, and I talked about this on a live session on the day that this came out. So you can see that video as well in the group if you want to. So if we look here on going to our MT4, and what happens is, right, we had this 4-hour area candle right here marked up. We drop down to the 1 hour, and this is where it flagged down. And what do we get right here? We get hammer time. This is what we call it, hammer time. Now, whenever we're looking to take a buy and we see a hammer type candlestick pattern form, and that forms in our area of interest, right? Our logical area where we're waiting for price to come into and react, right? That's a confirmation to take the trade. Now, the one thing I will tell you is this isn't the best looking hammer candlestick, right? Normally, the wick of the candle, right, is at least twice the body. So we would have liked to see the body of this candle be a little bit smaller, maybe up to here. So if we were to measure this, for instance, the body of this candle is about 20 pips. So we're looking for the wick to be about 40 pips, okay? So come down here, the wick's just about 29 pips. So for a body that size, we'd like to see the wick come all the way down to here for it to be a true candle, true hammer, okay? But to me, when I see this, that's the money train, right? Remember the movie Money Train with Wesley Snipes and Woody Harrelson? These candlestick patterns, when you're looking for buys, the hammer, and when you're looking to sell, the shooting star. When I see these two patterns come in my area of interest, that's just back up the money train, guys. Pull the money train up because this wins a significant amount of the time, okay? So in this case here, we would just take this trade without any ATH confirmation, without any double mitigation. We don't need anything else. If we're looking to buy and we get a hammer candlestick in our area of interest, we take that trade on the open of the next candle. If we're looking for sells and we see a shooting star candlestick in our area of interest, we take that trade on the open of the next candle. And this is on the 1 hour chart, guys, okay? Also, just as more of a confirmation, you also get that shooting star on the 4 hour as well, right? So that's a double confirmation. You have it on the 4 hour. You also have that shooting star on the 1 hour, because that doesn't always happen, guys, right? On this 4 hour candlestick here, this is 4 1 hour candles. So that could have came down into this area on this candle here and then came back up, right? But we get the confirmation here. We take the trade. So how's this trade? We would get in here. Our stop loss would be right here about 28 pips away. So say we're risking 30. We want to get a 1 to 3 risk to reward ratio. So if we're risking 2% of our account, right, we want to gain 6%. This is on one trade, guys, right? You can't get 6% on your money in a whole year putting it in a savings account, right? Or even in some other type of investment. We're talking about getting 6% return on this one trade, okay? And if you get 2 of these in a week, that's 12% a week, okay? Your money's going to double very quickly at 12% per week, right? So keep that in mind. That's why we do Forex trade. Now, of course, you're not going to take all of your money and allocate it into Forex trading. You're going to take a portion of your investment funds and use it to trade Forex, right? You're not going to put it because it is still riskier, obviously, than the other type of investments, but the reward outweighs the risk. So we're going to risk 30 pips to get 90, right? We take the trade and we're out. This thing shoots up 153 pips, okay? So we're going to get our 1 to 3. I don't know, sometimes we can use the exit manager and we can get out of half of the position, when we're up by, say, 60 pips, 2/3 of the way up. And then we can put the exit manager on and try to see if we can get it to go higher. Maybe we get a 4 to 1. In this case here, we could get out of half of this position when we're up by 60 pips, right? Which is somewhere down around here. And then we could try to get to a 1 to 4 instead. So in this case, a 1 to 4 would be 120 pip gain. We would easily get this. This one is actually a 1 to 5. So this trade here in EURAUD is a 1 to 5 risk to reward ratio trade. And then look what happens. You have to take your money and get out. Look what happens after that. After it comes all the way up to here, look what happens. Drop straight down. Okay. So tomorrow, when we do the weekly trend outlook and chart markups alert session, we're going to have to look at this to see if there's any place that we could take a trade next week. Probably not, but we'll have to see. So that's the one trade, one winning trade right there. No losing trade so far. The next one is EURNZD. So again, EURNZD, here's our candle that we had marked up right here, right? And price comes down right here. And what do you get again? You get 2 shooting stars here. This one kind of just misses our area. And the trade alert came out to my email on this candle right here. But you actually have 2 shooting star type candlesticks in a row coming down into our area of interest, right? The logical area where we're waiting for price to react, right? So if we look at this on our MT4, right? We go to the 4-hour chart. Right? And where's our candlestick at on the 4-hour chart? Okay, let's drop down to the 1 hour here. Okay, so when this came out, this is right here is where we took this trade. What do you have right here? Okay, so price comes down through our area of interest here, right? Price comes down through our area of interest. So let me look at this one more time here. This is our candle right here. Okay, this is let me just get rid of this right here because that's not there. Here's our 4-hour candle right here. So again, here's where price comes down. It touches our candle here in MT4, but it didn't touch our alert area in trading view, so we didn't get the alert. But still, even so, you have two hammer candlestick patterns right at our area of interest, right? And let's just mark this first one here so we know where we're at. Okay, now let's drop down to the 1-hour chart. So right here is where that comes in. Okay. And then you don't have that hammer candlestick. Let me just see if I can get rid of this. Let me just move this because what's going to happen is it's going to end. So you don't have a hammer candlestick here, right? This was the hammer. This is the 4-hour candle. But right here, it comes down pretty impulsively into our area of interest, right? We don't really like this candle right here coming down like that into our area of interest, but it doesn't go completely through our area. And what's the next candle we get? There's the hammer. It's hammer time, right? Hammer time again. Back up the money train, guys, because this is it right here. We're going to take this trade on the open of the next 1-hour candle. We're going to risk 40 pips, about 40 pips to get 120. This shoots up what? 190 pips. So it's not a 1 to 3. This is actually a 1 to 4 trade. So if you risk 2% of your money, you can get 8% on this trade. Okay. So if you got a $5,000 account and you're risking 2% of your money per trade, that's $100 that you're risking, right? You're risking about $100 in order to make a 1 to 3 or a 1 to 4. So you're trying to make $300 or $400 with that $100 of risk. So right there with a $5,000 account, you can get a $400 gain or a 8% gain on your account, right? So again, this is what we're looking for, guys. I tell you that right. So if you're going to risk 2%, you're risking 2%, which is $100, and you want to get a 1 to 3. Okay, so 1 to 3 means you're going to make $300 on if you get to your target. If it's a 1 to 4, you're going to make $400. So in this case here, we would have made $400 on a $5,000 account, which is an 8% gain on our money in one trade, guys. Now, even if you lose your next trade, you lose 2%, you're still up 6%. If you would then lose a second trade and you lose 2%, you're still up 4% for the day or for the week. 4% a week is way better than the 1 or 2% that you might get in savings account or what anywhere else. Anyway, this is the money train. There's the hammer. The hammer candlestick occurs in our area of interest, right? We're not worried about hammers anywhere else. We're not going to take a trade just because a hammer candlestick appears, right? We want it to appear in our area of interest, right? Our logical area that we're looking for price to move into and react, right? So there's the trade. That's our second winning trade, guys. No losses, right? No losses. Remember last week, we had probably 8 winning trades, but let's say 7 out of 8. Let's say we won 7 out of 8 last week. So here's 2 winning trades so far this week, no losses. What's the next one? The next one is EUR-GBP. So EUR-GBP right here. This trade, we have our candle marked right here in trading view. Price comes up, it hits it, right? Makes a move down, and then it comes back up. So let's look at this on EUR-GBP here in our MT4, right? So here's our 4-hour candle is right here. This is our 4-hour candle. This is our stop loss area on that 4-hour candle. So this is our area of interest right here, okay? So don't paying attention to this line here right now. This is our area of interest, the second and third line from the bottom here. So what happens is it comes up, it comes into our area of interest here on the 4-hour chart. So it does that on this candle right here. So let's make sure we know where we're at here. When we drop down to the 1-hour chart, what do we see? Right? We see it come into our area of interest, right? And then right through it. So let me look at this. Wait a second. Let me see where I'm at here. One more time. I got a little bit confused here on this one. This line down here is just screwing me up here. We got to get rid of this line right here. I don't know what that line's doing. Okay, this was our 4-hour area, right? If we go back in the trading view, let's just to make sure here. Our 4-hour area is right here, comes back up, hits it right here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 candles back, it hits it. Okay, so we're on the 4-hour chart, right? There's our area of interest right here. Here's where it flags up and it goes into our area of interest right here on this candle. Okay, so again, let's drop down to the 1 hour. See, okay, let's just move this candle here. So here's it coming up, comes into our area of interest. Okay, now right here, we get it's not hammered, right? It's not, we would be looking for a shooting star here. So there's no money train trade here, guys. So here we have to wait for the ATH to come out. We have to decide whether or not we could take the trade right after the ATH arrow, or if we then need to wait for a break of structure and possibly double mitigation to take the trade, right? In this case here, we're going to need to wait because it moves up into our area. Then right here, we get the ATH. So what happens is we would have to put our stop up here. So we would be risking about 50 pips, guys. So it's a little bit too much because we can't really get a good risk to reward ratio on this particular trade if we have to risk 50 pips, because as you can see here, the average daily range for this is only about 103 pips a day. So I don't really want to take that trade there. So we need to then wait for a break of structure and get double mitigation. Okay. So what happens is we do get a break of structure. You know, you get this move down to here. So your structure is kind of right along this line here, right? This is kind of your structure right here. So you get a break of structure. And then once you get that, you can identify this banker candle right here for double mitigation. You see here, it comes right up, right? We get the double mitigation. Now we don't set limit orders, guys. And this is why, because look how it just blows right through here. Okay. So we get our double mitigation. It blows right through here. And then it goes right through our area and that invalidates the trade. Okay. But after that does happen, we again get another ATH confirmation here. Now, here's the only thing about this, whether or not we want to take this trade, I don't know. And what I want to show you is on the 4-hour chart here. Now, if you've been to our group and if you've taken your free week of training, you know about the 2 trading patterns, the only 2 trade setups you'll ever need to know. One of them is called the signature pattern. So let me just real quickly here, see if I could snip this section here as well. Right, so what we're looking for, we look for a consolidation. You see this consolidation box right here? Okay, so that's our consolidation area. Now in the signature pattern, what the banks and institutions will do is, if they want to go down with this, they'll first make a move up. They'll come up here and they'll take out the liquidity up here, right? Then they'll make a move down. They'll take out all this liquidity. Then they even go further down here with this pin. Then they'll come back up to our banker candle, okay? And in this case, our banker candle is going to be up here, okay? So this is setting up as a signature pattern, right? So like our other trades are kind of what we call smart money trades, right? That's why I call it the Forex Smart Money Trading Academy. This trade here is setting up as one of our 2 patterns that we teach you to look for, right? The only 2 patterns you ever need to know. And if you don't know what I'm talking about there, you need to get in touch with me to get your free week of training, because you'll get access right away to our group, and you'll get access to the 2 training videos that teach you the only 2 trade setups you'll ever need to know. One of them is the signature pattern. The other one is called the banker's box strategy. Okay. So this is a signature pattern, and this is setting up, but the banker candle is actually all the way up here, this candle right here. Okay. So let's get back to our chart now. So this one we'll have to wait for next week to see what exactly we're going to do with it. But because of the way this moved up here and then it moved down, it created the signature pattern. Our banker candle now is all the way up here because it's the last up candle before this down move. So our banker candle is all the way up here now. And so this would be our new area of interest if we were going to take a sell on this. Okay. And that's why, because of this signature pattern here, you know, that's why, you know, when we looked at this here, we didn't have any trade. Okay. So we're still waiting to see if we could take a trade here. We'll have to wait for next week for that one. Okay. The next pair here is AUD-CAD. So if you look at AUD-CAD here, we see that our banker candle was right here. This was towards the beginning of the week, so it's a little further back here. Our banker candle was right here, and we came up into the area here a few times, right? So we have to kind of try to find it here in MT4, right? And let me see where I put it here. So our banker candle right here. We come up right here into our area of interest, right? And then right here, we got our ATH confirmation, right? So it comes up, we get our ATH confirmation right here. It doesn't go through the area. And let me just check one more time here on this. I'm getting a little bit confused on this one here. Our banker candle's right here. This is going back in the last week though. So here's our banker candle right here, right? So it comes down, then it comes back up. So this is the candle where it comes back up into our area, okay? All this stuff happened the week before. So right here it comes up, right? Makes a move down, comes back up into the area. Then we get the ATH confirmation right here. So we would take the trade right here, and we would risk 25 pips to get 75 pips on a 3-to-1, okay? This drops down 64 pips, okay? So we wouldn't quite get our 3-to-1 on this, but using the exit manager, we probably would have gotten out of half of the position once we were up by 2/3, right? So using our exit manager, we could have turned this into a winning trade very easily, because I don't know about you guys, but if my target, let me just look at this again. So actually the stop loss would be right here at the top of the ATH candle, okay? So we'd risk 15 to get 45, and we would easily be out of this trade. So this is actually the 3rd winning trade right here, AUD-CAD. So we had 3 winning trades, and then of course the 4th trade here, the first one that came up on Monday, EUR-CAD, that was a losing trade. I went over that in a live session earlier in the week where that would have been a losing trade. So I'm not really going to show you that one. That was a losing trade. Well, I mean, I might as well show it to you. What's the difference? This came back into this area right here. So here's our banker candle. We came back, we touched this area a few times right here. So we have to see where our alert actually came out on this, right? So here's where it comes into our area. Okay. So right here, it comes into our area. And right here, we get our ATH alert. Well, we get an ATH alert, but look how far away from our area it is. So in this case here, it's like 60 pips away from there. You know, again, we can't go lower than here higher than here for a stop because of where our candle's at. Okay, so we don't want to take this trade. We want to wait for break of structure and double mitigation. Okay, so we get break of structure on the candle itself. We don't get double mitigation until it comes down to here and touches. And what do we get here? We get this hammer-like candle here. So if we would decide to take this trade on the next candle, which I think we did, we're risking about 16 to get 48, and we don't quite get it. It goes up about 44 pips. So again, if you're using the exit manager to get out of half of the position when you're up 2/3 of your pips, right? So if you're targeting for 75 pips, when you get up by 50, you get out of half the position, right? You move the stop loss to break even plus 10, and you let it run by fractals, okay? So if you do that, you would win on this trade. You would get out of half of the position. Let's say, let's see here. If we put our stop loss down here, because this ATH candle goes below our area of interest, we use the ATH, we use the double mitigation candle right here, right? That's the double mitigation candle. So we could put our stop loss here, but if we put our stop loss down here, then we'd be risking 30 pips to get 90. So it'd have to be up 60 pips. So that's why this is actually a losing trade. That's why I marked this down as a losing trade. So this week, guys, we had 7 trade alerts come out. 4 of them were trades that we could take. 3 of them were winning trades. 1 of them were a losing trade. I think that I actually did get to take 1 of these trades. Well, actually, I took 2 of the trades, right? If I could look in the group here, just give me 1 more minute. So right here, I got my 3% on the AUD-CAD trade, but I would have lost 2% on the EUR-CAD trade, right? So I got my 6%. I'm sorry, I got my 6% on the AUD-CAD, but I lost 2 on the EUR-CAD. So for the week, I'm up 4%, guys. Just 4%. That's for the week, right? You can't get 4% in the whole year putting it in a savings account or even in some types of investments, right? Okay, so this was our weekly session where we go over the trade alerts that came out last week, the week of 10/17, right? So if you don't belong to the Forex Smart Money Trading Academy group, this is my personal group. We have our community groups as well, but this is my personal group where I do the live sessions and go over everything for you. But if you don't belong to this group, make sure you send me a text, message me so I can send you the link to join the group. If you haven't gotten your free week of training yet, make sure you get in touch with me so I can get you set up for Monday's session, 12 p.m. Eastern time. The experts in our community go live every Monday through Friday, 12 p.m. Eastern time. They actually mark up charts, show you where and when to take trades, and how we do everything 4 days a week, Monday through Thursday. Friday is more of a mindset and question and answer Q&A session. So you can get on there and you can ask all your questions as well, okay? But you're not going to learn the strategy in 1 week, guys. It's just a 1 week free training for you to try us out, check us out, see if you like what we're doing, see if you like our strategy, see if it makes sense to you. If it does, then you join our community. You'll get access to everything, all of our training, all of our live sessions, and you'll get our ATH indicator as well that I show you in the videos. Okay, and until tomorrow, guys, I'm going to go live tomorrow on my timeline, and I'm going to do the weekly trend outlook and chart markup session tomorrow. Have a great day, guys.